in this class. Okay, so can we go, please? I'm not seeing any life in this group, man. What's up? What's up? What's up? What's up? Are we still here with us? Are you still here? Okay, so I can see the. Please let's put life here, man. Let's put life here. Let's put life here. Come on, come on, come on, come on. Don't just keep me talking. This is not a class we just want to talk alone. We want to also hear from you and know those so that we can know the proper advice you were giving to different class of people in this meeting. So please go ahead. We have over 30 something people here already out of over 600 people who indicated interest in the group. So let's go ahead, please. Come on, keep it coming, keep it coming. So I can see Oduola is a forex trader, is a CPA marketer. I can see Captain Will. I can see Global Simmer. Please, Akpayemi, I'm a credit control manager and an entrepreneur. I'm seeing David is a graphic designer. Steven is an entrepreneur and a trader. I can see King Patrick is a full-time freelancer. I can see Peaks. Um, Ayomide says is a broker. NS Chideziaja, I'm a project manager, a student, and a business owner. I am Peace. I run an e-commerce company. Please let me keep seeing those who are with us. It's only five people that are in this meeting. I'm Lydia. So we have small business owners, one-man businesses, brokers, traders. I'm not getting energy from you guys. It's like you guys don't want us to hold this class. This is not the usual class I hold. This is not my kind of class. So can we keep this introduction coming, please? Mike, I'm an entrepreneur. I'm a data science specialist. Wow. So out of over 30 something people, we just have like 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. 10 people introducing themselves. That's serious, so even for a free class. Interesting. Anyway, I'll go ahead and do my introduction. So we have two experts here who are going to educate us on what needs to be done and what we need to know. So the first is Akin. Uh, is an ACA, ACTA lead consultant of Efficacy Professional Services. He's an analytical and versatile professional, finance professional with strong expertise in financial analysis, taxation, and practical application of accounting principles. He has a solid background in accounting software and demonstrates creativity in designing and implementing procedures aligned with aligned with GAAP to drive operational efficiency and productivity. Okay, so Akin is here with us. Uh, his professional experience, he has worked in KPMG, Pedabo, the Podium, with strong foundation in tax, audit, and professional services. He's an accounting graduate from Babcock University and is professionally certified by the Chartered Institute of Taxation Nigeria and the Institute of Chartered Accountants Nigeria, ICANN. So Aki serves as lead consultant for Efficacy Professional Services, where it provides strategic, financial, and tax advisory services to individuals and organizations. Uh, Okay, so the second on our list is Momoh. Momoh is a business lawyer, is a startup lawyer and an expert. He consults for several companies and businesses, and even in the private individuals, HNIs and co. And he's an expert in law, and he's going to cover an aspect. Akin will also cover an aspect. So the two of them will be the two running this class. So um, please, I'm going to welcome Momo now to take over and give us what we need to learn. I'll also be on the side too learning, but I know that I've worked with these two professionals. I keep working with them and they help prepare all our books, they help prepare taxations, they help prepare several stuffs. And I know that today you guys are going to learn. And so the thing here is this: let's forget about any panic that has to do with the new tax law, first of all. Panic is not our own approach. Our own approach first is to understand what we need to even do as a business, whether it's old tax law or the new tax law. You must understand something first of all. The game has changed. Preparing your books should be a normal thing for you as a business. Preparing your books should be a normal thing for you, even as an individual. If you've ever, I don't know how many of you have applied for maybe a Schengen visa or a visa in different countries, or maybe you've lived in a country or in a region where there is, for instance, you need to prepare your business to apply for things like permanent residencies, travel documentations, and all those things. A lot of these things matter a lot. Okay, so having your books, both your personal income, both your personal taxation, both your everything has nothing to first do with the new tax law. It has first to do with you doing the proper thing that can make you be open to having opportunities and not missing out on them. So there are a lot of benefits which I know that Aki and Momo will do justice to. So I'll leave the mic now and we'll get into the class proper. So welcome once again and enjoy the class. Over to you, Momo.
Okay. Good evening, everyone. Hope you can hear me clearly. If you're
Yeah,
hearing
go
me
ahead.
clearly,
Go
kindly
ahead.
just type the word yes. Type yes on the chat so that I know that we are connected. Just a moment, please. Hello, sorry for the interruption. We just needed to sort something out. My apologies, my apologies. All right. Once again, good evening to you all. And it's nice having you in this on this webinar. So standing on the existing protocol, my name is still Momoh Sule, and welcome to this tax education section organized by DABA School. I believe we are here today for one reason: to get clarification, clarity, understanding of what the new tax law is and what the tax law is not about. And also how we can take advantage of the legal means available to us in order for us to pay less tax and, if possible, zero tax. That is why I believe we are here today. And of course, we all know that from a few days from now, the new tax law will take effect. And as expected, once there's a new law in town, any law that has some controversy around it, it comes with a lot of confusion. No thanks to content creators who have also contributed to the confusion that many of us have heard about the new tax law. It comes with confusion, concerns, misinformation, and some are outright fake news. Fake. For example, government will take money from your accounts. How? That's not true. And some of us we've had a lot of things about the tax law, and we have some concern. For example, I know many of us must have heard that, is it all the money? We must have been asking this question: is it all the money that entered into my account that I'm going to be taxed on? Or what about if someone sent me a gift? Oh, today's my birthday, and a good Samaritan, a generous person, sent me 1 million naira as my birthday gift, and it hit my account. Will the government tax it? We all have all these concerns and questions in our mind, and we are going to provide answers for you. Now, generally speaking, there's nobody that likes paying tax. Nobody the world over that loves paying tax in any form. Some persons believe that taxation is a way in which the government steals from the poor, basically steal from the poor or steal from the citizen. Well, that may be true, but I'm not the one saying it. Why some other persons have been asking, why is it that with the way businesses are suffering in Nigeria, with what we are passing through in Nigeria, the constitutional burden on our business, why is the government making life difficult for us? Well, this is some persons' opinion. Why some persons are even advocating or even clamoring that due to the controversy surrounding the tax law, that the tax law should even be suspended in its entirety. Well, let me be definitely, I know that it will not be taking you by surprise again, and you'll be able to filter facts. You should be able to filter facts from reality. I believe you can all see my screen. Let me just quickly draw your attention to this. I know some of you must have come across it, and those of you who have not, you can see it. If this was happening before the new tax law is taking effect, how much more when the law takes effect? This is Pella, the popular TikToker that you all know, or the streamer. Early this year, the Lagos state government slammed him a tax of 36 million for him to come and pay. Same thing too with Yaba Ojo. You can see reported by the Punch. They asked her, they slam her with a tax of 18 million. And this is the popular lawmaker or ex-lawmaker, Dino Melaye. He was slammed with a tax of 509 million. This happened before the tax law is coming into force. How much more when it takes effect? The point is this: the game has changed. We are entering into a new era. The best you can do for yourself is to get the necessary knowledge and be well equipped so that whatever comes, we are going to be able to surmount it. However, as I've mentioned, after this webinar, we are going to have a cohort class where we are going to have a deep dive and teach you more on how to structure your finances, structure your tax, know how to compute your tax, and also all the necessary compliance strategy that you need for you to be able to play the game with the tax authority. That's going to be for our advanced class. Yesterday in our group, I made a post about Elon Musk. Elon Musk is the richest man in the world. Elon Musk does not collect salary. How does he do that? It's because of he has tax experts that are guiding and advising him. He doesn't take salary. Same thing too with Mark Zuckerberg. He takes almost next to nothing as salary. Yes, he's one of the richest men in the world. Same thing too with Jeff Bezos. Jeff Bezos is also one of the richest men in the world, the owner of Amazon. How much does he pay himself as salary? Little, peanuts. About 6,000 plus is what $6,000 per month is what Amazon pay him as salary. Why is he doing this? It is because of tax strategy. Tax strategy. An expert has guided them on how they can structure their finance. That's why they are able to do all this. And that is what we're also going to do for you, for you too. Now, here we go. Accounting. You cannot be an income earner, a businessman, and you are not serious with your accounting. If I told you are not serious with accounting previously, going forward from next year, which is a few days from now, you have to take your accounting seriously. By accounting, I'm not talking about that you should go and become an accountant. No, I'm talking about your bookkeeping, your simple bookkeeping. Because accounting is the language of money. Accounting is the language of finance. And accounting is the knowledge of business. Sorry, is the language of business. So going forward, please, we should not joke with our accounting. Albert Einstein, which I think many of us know about him. He said something. He said, the hardest thing in the world is to understand taxation. Taxation is one of the hardest things to understand, especially income tax. And that's why the rich, that's why the rich have expensive accountants that help them to minimize just how much they pay in tax. Some of you must have had this, and those of you who have not had, I'm telling you now, the rich do not pay tax. And even if they pay very little tax. And the reason is because of their tax strategy. Pay very little tax. Basically, it's the poor that pay tax. Basically, it's the poor that pay tax. And that's why we are here today to see how we're going to help you in structuring your tax. Now, before this meeting, we have the new law that will be coming in place. Before this meeting, of course, I'm a lawyer. I've read the new tax law, 4-in-1. The law are 4-in-1. We have the Tax Reform Act. We have the Nigerian Tax Administration. We have the Nigerian Revenue Service. And we also have the Joint Revenue Board Establishment Act. Now, these are the 4 laws that governs taxation. And I'm telling you that I've read all these laws. So I'm speaking to you from the position of knowledge. I'm speaking to you from the point of experience as a tax expert. The tax expert. So just be rest assured that the person speaking to you is speaking to you from the position of knowledge and experience. Even though I know that content creator has taken over the space, trying to see how they can get Elon Musk's money and start saying whatever comes to their head. One point I want you to note is this: the law that will be taking effect is new. So for the fact that it is new, it is not 100% clear at the moment. For example, the guideline has not been released. Also, the regulations that will support the law have also not been released. So the law is not yet 100% clear. But nonetheless, we don't have to wait till everything is clear before we start taking action. And the areas that are not clear, we, the experts, we are here to guide you and teach you and tell you what to do. Now, going forward, if there's anything you are going to take away from this webinar is this: keeping record is very important going forward. It is so important that it cannot be overemphasized. By keeping record, I mean it could be just a simple document. It could just be an exercise book that you just have. You use your ruler and your pen and divide the pages into 2. One is income, one is expenses, or one part is credit, one part is debit. Just that simple accounting that you're going to use to be keeping your record. And it's sizable account to keep your record. Nonetheless, we have an Excel template for those who are going to be interested in it. We'll make it available to you. That template is what they're going to use to not only compute your tax, but use it to record all your income and expenditure. Your income, your expenditure, that template, you can use that template to calculate your tax. In fact, you can do it yourself with what we are going to teach you eventually. You can do it yourself. You can complete your tax yourself. You don't need to be waiting for any experts to come and to come and teach you. Because of course, experts are not free. If you go and meet a tax consultant now for them to help you to structure your finance or arrange your books, you're going to pay them. But we're going to teach you what to do part time so that you're able to do all these things yourself. Now, tax filing is mandatory going forward. Every individual must file their tax. Either you are paying it or you're not paying it. You must do your filings. It's now very important and necessary. We are going to guide you on how to compute your books and also on how to file your taxes. We're going to guide you. And also, one thing you should know is this. In as much as many of us have seen the tax brackets, oh, will I pay 15%? Will I pay 18%? Well, it's not that is not how it works. Now, the law itself that asks you to pay tax gives you some relief, gives you some deduction, gives you some allowable deduction that you can deduct so that and for you to pay less tax. But the question is this: do you know those reliefs? If you know them, how do you identify them or how do you apply them so that you're able to pay less tax? These are some of the things that we are going to teach you. And also, I want you to also understand this. It's not in all time or at all situations you must pay tax. Will you pay tax if you don't make profits? No. So what happens in that situation that you don't make profits? In fact, there are instances where you can even make profits and your tax expert will even guide you on how to even declare loss. But of course, that is in the realm of tax evasion. That is not what we are going to do for you. What we are going to do for you is we're going to guide you and help you so you're going to pay minimum tax. But the point is this: the law gives you some relief that you can take advantage of. Now, I want to talk about taxation. Taxation is broad. It's so big. It's so big. It's broad. What taxation? What are we talking about? Number one, we're talking about VAT, VAT, value added tax. Many of us here, we pay VAT. Some of us don't even know that we pay VAT. We pay VAT. As an individual, you pay VAT. As a company, you collect VAT. So VAT affects all of us. An individual, you pay. As a company, you have a responsibility to collect tax. Sorry, to collect VAT. But what category will you fall under before you collect VAT? We'll teach you all this. We'll teach you all this. What about taxation? We're talking about payee. Pay as you earn. Pay as you earn, and also companies too. Because as a salary earner, you pay as you earn. Your personal income tax is called payee, pay as you earn. While company, you also have the responsibility to collect tax, to deduct it from the salary of your employee. Failure to do that, there's penalty. There's penalty. And also too, as an individual too, who is also paying payee, you also need to know what are the actual deduction my company is supposed to be deducting from my salary. Because if you don't know how much your company is supposed to be deducting, you go enter one chance. So it's one chance. Your company will just deduct and will be cornering your money and you won't know. So you also need to know what are the actual deduction and also how to compute, how to calculate what you are expected to pay as tax. One thing about taxation, we're also talking about CIT. CIT is company income tax. That's the tax that company pays. Company pays. When we talk about taxation, we're talking about PIT, personal income tax. Now, personal income tax are tax that are paid by individuals, business name, consultants, those who are not having a formal company, those who are self-employed. Your own category of tax is called PIT, personal income tax. That is what taxation is all about. When we talk about taxation, we're also talking about WHT, withholding tax. What is withholding tax? And who does withholding tax affect? And for business owner, how do I collect withholding tax? At what point should I deduct withholding tax? Let's say, for example, now you are a company now, you want to pay or as a company now, you want to pay, let's say, a professional that's coming to render services for you. You want to pay a professional 1 million. By law, you have to deduct a certain percentage as WHT withholding tax. So instead of paying the person 1 million, you might end up paying maybe 900,000 or 950,000. It's what you now pay to the professional. What you deduct? You are deducting of the government. We'll discuss all this. We'll discuss all this as we move forward. So I'm talking about what is taxation. Taxation also includes tax filing. Paying is having the awareness that you're going to pay tax is one thing. How do you file? How do you file? There's a procedure to follow for you to file your tax. You file your tax or pay your tax. Because paying is one thing, filing is another thing. Because there are instances where at the end of the year, you do not make profits. You must still file, even though you're not paying tax. You must still file. And for those of you who must have heard that, oh, a company that its revenue is below 100 million, 100 million or 50 million, is actually 100 million. Once all this controversy is done with, they are going to rectify it. It's actually 100 million. Once your revenue is below 100 million, that does not mean that you just stay without doing anything. You still need to do your tax filing, your annual returns. You must still file your annual returns. So how are you going to do it? That is what taxation is all about. There's what's called capital allowance. We're talking about taxation. We're also talking about capital allowance. In fact, capital allowance is one of the relief that a lot of rich people, I believe after this meeting, by next year, all of us we are going to be in that category of rich people. Capital allowance is one area that the rich are benefiting. What's capital allowance? Let me just break it down for you guys a little. Now, personally, let's say you have 10 million naira. Personally, you're personally for you. You want to buy a car or you buy a car of 10 million. You want to do big boy, you want to do big girl, you buy a car, 10 million to flex. Personally. Now, that's your personal expenses. The law does not have regard for it. But that same 10 million now, you own a company. Instead of you to buy that car in your name, you buy that car in your company name and you classify it for company use. Whereas now you the user, you are the one that is using the car, but you buy it in the name of your company. And the purpose is for company use. What you have done? The law allows you to deduct your capital allowance. So that car you bought for 10 million, the law allows you to take back that 10 million naira from your profits, from your company. You can take it back. Although not at once, but gradually, you can be taking it back. I think at first it's 20%. You can take back 20% of that value for the first year. Then you split it into several years. You're taking it small, until you get back your 10 million. So the law allows you to do that if you own a company. But as an individual, you can't try it. You can't do it. So a lot of people you see, rich people that you know, many of them, their assets are not in their name. They are not in their name. I can assure you today that Dangote private jet is not in his name. It's not in his name. It's the name of his business. And it is the business that take the expenses. So he deduct the expenses of maintaining that his private jet from his business. But if you're an individual, the law does not give you that allowance. If you want to take care of your private jet, it's from your pockets. It's from your pockets. Now, going forward to, when we talk about taxation, we also talk about penalties. Because failure to remit tax, there's a penalty that you are going to pay. There's a penalty for that. Also, when we talk about taxation, let's talk about capital gain tax. You bought a property for 1 million and you sold it for, let's say, 2 million. So you have made 100% gain. That additional 1 million gain that you derive from that sale, you have to pay tax on it. You have to pay tax on it. So going forward, these are some of the concepts that you should know about taxation. Don't want to talk about taxation. Taxation is broad. It's broad, really. But don't be scared. We are here to help you. Now, going forward, tax or taxation, tax is not common knowledge. It's not common knowledge. It's a technical area of finance. Unfortunately, with the coming of social media, everyone with a ring light is delving into the topic, thereby creating confusion, creating panic, and creating misinformation. Now, what the new tax law has done is this. People have been paying tax before, it's not new. But what the new tax law has done, the fundamental thing the tax law has done is this. It brings in more people into the tax nets and also makes payment of tax compulsory. That's just the two fundamental things that this new tax law has done. And that's why we are here today on this webinar. That's why we are here today, because going forward, we're all going to be paying tax. And many of us now, we're not inside that tax bracket. The moment your income in a year is above 800,000 naira, you are already inside the tax bracket. Already inside the tax bracket. Now, what are the strategies? Tax law. Let's see how the new tax law is going to affect your income. Your income. Now, under the new regime, only income is taxable. There's one thing you take away, in addition to what I've said before. There's one thing you take away from this webinar tonight, is that what is taxable is income. It's only income that you pay tax on. Anything that does not qualify as income, you don't pay tax on it. Gift. Someone gives you money, you don't pay tax on gift. So it's income that you pay tax on. The question is, what is income and what qualifies as income? Number one, salary and wages. If you get salary, if you collect salary or wages, that's income. Business profits is income. If you're a freelancer and professional, the fee they pay you qualify as income. If you're a digital earner, you earn from Elon Musk's money, you earn from TikTok, you earn from YouTube. If you're a digital earner, that qualifies as income. And also investment too, to some extent, investment too. You make an investment, you make profits to some extent, not in all categories, but that also qualifies as income. So this is what income entails. So anything that does not qualify as income, you're not going to pay tax on. And that's why that question I asked earlier, which is the concern of many persons, is it all the money that enters my account that I'll pay tax on? The answer is no. As far as that money that passed through your account is not an income, you will not pay tax on it. However, there's a catch. Documentation and record keeping is very, very important and vital. And if money flows into your account and you cannot explain it, it will be treated as taxable income. So the burden is actually on you, the taxpayer. Now, self-assessment is another key thing that we should know from now and henceforth. The burden of paying tax is on you, the taxpayer. The burden is on you, not on the authority. It's your responsibility to go and declare honestly what you earn. Declare your income honestly, file your return correctly, and pay the right tax, and pay on time. It's not just to pay, you have to pay on time. Just imagine, government is already taking money from you, and the government is still telling you that, look, if you don't pay on time, will still penalize you. There's also a penalty, an additional penalty for you to pay, if you don't pay on time. So the responsibility to keep record, to declare your income honestly, file your return correctly, pay the right tax, and pay on time. Ignorance will not protect you. Basically, in law, ignorance is not an excuse. So this is what you should know. As I've mentioned earlier, there are some tax relief that the law provides for you. As much as the law says pay tax, the law still gives you some allowance in which you can take advantage of. But the question is, as I've asked earlier, how many people can take advantage of it? How many persons know how to take advantage of some of this relief? For example, pension. Let's say your salary in a month, let me use in a year. Let's say in a year, your income in a year is 1 million. In a year, let's say 1 million in a year. As an example, the government will not tax your 1 million if you take advantage of the tax relief. For example, there's pension. If you are doing pension contribution, let's say, for example, now after that your 1 million in a year, your pension contribution is 100,000. the law allows you to deduct 100K from that 1 million. So you can see what you now pay as tax is on that 900,000 naira. Remember, this is just an example. Is 900,000. Then let's take it further again. There's also what we call a national housing fund, If you're also contributing to the national housing fund, because if you are a contributor to the national housing fund, you can apply for loan, for housing loan. They can give you a loan to go and purchase a house. So if you are contributing to the National Housing Fund, let's say you're also contributing in a year, you're contributing 100K to the National Housing Fund. After that, you're welcome. Remember, you've taken 100K for pension. You've taken another 100K for your contribution to the National Housing Fund. What is left is now 800K. So is the 800K the government is going to tax. Now, let's take it further again. There's also the National Health Insurance relief, National Health Insurance. Let's say you're also contributing to National Health Insurance, or you're a subscriber to National Health Insurance. And in a year, the contribution to National Health Insurance is 100K. So you can see, after that 1 million, you've taken 100K for pension, 100K for national housing, another 100K for your National Health Insurance. So what is left is 700,000. So that's 700,000 that you're not going to pay tax. You're going to pay tax on it. So you now understand the relief now, how the relief work and how you can take advantage of it. So I'm going to talk about how the tax law is going to affect your business, your income. The next thing is, how will the tax law affect your business? Number one, business structuring. Business structure now directly impacts the amount you pay in tax. If you have a proper business structure, it will help you to pay a reduced tax. But if you don't have a good business structure, just know that you will become a cash cow to the government. You'll not be paying tax up and down. Now, under the new law, poor structuring will expose you to higher tax. And also, too, as a business owner, too, going forward, you should be very intentional in structuring your business. One example is this: don't mix your personal money with your business money. Don't mix it up. Separate it. Also, your informal, stop doing informal operation. Stop taking money from your company as you like. You get tax aside. Doesn't speak well for someone who is a serious business person for him not to have a good structure in place, to have a good operation in place. No, you should not be doing it from next year. Now, many businesses are definitely going to be overpaying tax because they are not properly structured. They're not properly structured. Definitely they are going to be overpaying tax. But we are here to help you to structure your business in such a way that you will also be in the league of Elon Musk and co. That you'll be paying peanuts as tax. Now, record keeping. Record keeping is no longer optional. Record keeping is now vital and it's going to be your legal shield. Remember, I told you that it is your responsibility now to be able to, it's your responsibility to serve as people are making. But the tax authority are not novice. The tax authority are not village people that you just cook up your book, cook up stories, and you now say you are going to file. They'll ask you questions. They'll ask you to defend what you have recorded, which is why it is good for you to have a tax expert by your side that's going to help you to structure your book and also your record. So make sure that your sales and income record are intact. Your expenses too should be well documented. For those of you that owns a company or that you're going to incorporate a company, your payee record, you have to keep your payee record because of the purpose of audits. Now, one funny thing about tax is this: you may be cooking your books, filing anything you think you can file. The tax authority will come and audit you. They'll come and audit you. They can audit you for 3 years ago, for 5 years ago, for 10 years ago. They'll tell you bring your books for the past 5 years for them to audit, which is why record keeping is very, very important and vital. Clear record, lower risk. not having an improper record will definitely expose you to high risk of paying a very high tax. Also, too, digital creators or those of you that have offline business, you're no longer invisible again. You're no longer invisible. The tax authority are put in place. The tax authority are put in place measures that they can use to detect whether you're actually paying the right tax or not. If you see the example that I showed you earlier from Pella, from Iyabo Ojo, from Dino Melaye, you think the tax authority they're not seeing? They are seeing you. This is the reason why you see the rich people they don't flaunt their wealth because of the tax authority are watching. They are watching. They are watching. So going forward now, if you have an inflow into your account of more than 25 million in the space of 3 months, it is then the responsibility of bank to notify the tax authority. I hope you are getting this point. If you have an inflow into your account of 25 million and above within the space of 3 months, the bank will notify the tax authority. So that tomorrow, when you are going to declare your income, you declare your income, and you're going to declare that, oh, my inflow, or for those that think that, oh, that 100 million threshold that they're talking about, oh, I will not, I'll dodge it. Well, you cannot dodge it. Oh, as far as there's an inflow into your account, up to that amount, 25 million, the bank will notify the tax authority. But nonetheless, there are ways you can go about all these things, which is why we are here to guide you. It's also a red flag. It's a red flag. Number two, lifestyle. Lifestyle no longer hide non-compliance. So I've already mentioned that Pella and the rest. Your lifestyle alone, if you are living large, flaunting wealth, when it's time to pay tax, you now go and declare peanuts, where the tax authority will tell you no, it's not possible. We are seeing you, we are watching you. There's no way you are driving a Bugatti. There's no way you are driving a Rolls Royce, and you are coming to say that this is how much you are paying. No, 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 no. We don't agree. And they have the power. It's what we call presumptive tax. The tax authority, they have the power for them to, on their own, use their own initiative to bill you, to assess you, and say, from our own assessments, from the data we have about you, this is how much we believe is the tax that you have to pay. That is the reason why you see the Lagos state government slam Pella 8 million naira. That look, from the lifestyle we are living, from the things you are showing online, the kind of car you are driving, no, there's no way you come and tell us that you don't have more, that what to declare is your income. No, that is not true. I've mentioned those of offline businesses too are no longer invisible again because of banks are now mandated to report inflow into accounts. Now, what are the practical strategy to stay ahead? Practical strategy for you to stay ahead. Number one is this: separate personal and business finance. Make sure you separate it. If you are a self-employed person today, make sure you go and open a corporate account so that your inflow, your income will enter your corporate accounts. Then you cannot be paying yourself a salary. Pay yourself a salary. So you have to do two accounts. You have your business account and you also have your own personal account. All your inflow should pass through your business accounts. It's one of the strategies that's going to help you. Number two, I've mentioned it. Pay yourself a salary. Pay yourself a salary and avoid random withdrawal avoid random withdrawal. These steps will go a long way to help you to avoid audit risk. Then strategy number one is separate personal and business finance. Strategy number two, track income and your expenses monthly. Track your income and your expenses monthly. How do you do that? Very simple. Use simple accounting tools. I've mentioned it doesn't have to be complicated. You can buy an exercise book and use, although that is local. You can buy an exercise book and use. Nonetheless, as I mentioned earlier, you can also use an Excel-based tracker. If you can design an Excel sheet yourself, fine. It's also good too. Design an Excel sheet that you can use to track your income and also your expenses. Well, as I mentioned, we have an Excel template for those who will be interested. We'll make it available to them that they can use to track their income, record their expenses, use it to also calculate their to calculate their tax. Then also another strategy is this: structure your business for tax efficiency. Structure your business for tax efficiency. But taxation aside, why will you be running a business that is not properly structured? A business that is not properly structured. Please desist from doing that. After today's webinar, go and structure your business. And if you don't know how to structure your business, don't worry, we are here for you. We are here to help you. Choosing the right business vehicle is very important. It's very, very important. Choosing the right business vehicle is very important. It's either you are using a limited liability company, although there is a general consensus that upgrade your business name to LLC or LTD. Well, I don't know. It all depends. It all depends. But the general consensus, which is also advisable, is that if you register a business, and those of you that own a business name, you can upgrade it to an LLC. But the point is this: it's not just to go and upgrade that matters. You need to get proper guidance, because you can still upgrade, and yet you'll still be paying excess tax. And you may not upgrade. You may not upgrade, and yet you still pay low tax. So not just to upgrade, but to get proper guidance on how you can go about all this. Claim allowable deductions. I've mentioned some of them. Claim allowable deductions. There are some business expenses that the law allows you to deduct. For example, now, of course, let's say in a year, your total income is 1 million. Of course, all that 1 million is not your profits. There's business expenses. There are deductions the law allows. There are deductions or expenses the law does not allow. It's not novice. They're not village people. They know what they are doing. So you cannot just go and cook up your books and go and present it before they know. You have to know what are the deductions the law allows and what are also the deductions that the law does not allow. For example, now let me give you something that happened recently. A man, there was a particular case that I handled. Now, this man had an inflow of 10 million. He has an inflow of 10 million. But he has not earned that 10 million because he has not rendered that service. He has not rendered that service. So there's no way that he has not earned the 10 million, even though the 10 million is already sitting in his account. So in that situation, when he's reporting his income, definitely he will not include that 10 million because that 10 million has not been earned. And also, this is also another technique of reducing the amount you pay as tax. You can get an inflow. Now, let's say you render a service of 10 million naira. You can record it in your book as an unearned income. Even though you have already rendered the service, you record it in your book as an unearned income. I'll just give you people one expo now. So once it's recorded as an unearned income, definitely it will not form part of the income you're going to report, even though it is there in your account. Even though the tax authority are saying it, of course, you told them this income has not been earned because I have not rendered the service. So of course, you'll not be paying any tax on the profit you're going to earn from that 10 million. I've mentioned claim your allowable deduction, use your relief correctly, then timing income. Okay, that's what I just said. Timing income and expense properly. Timing income. So you receive 10 million and you've not rendered that service. You've not earned it. So that does not form part of your income for that particular year. It won't form part of your income. So just know all these techniques. Tax avoidance is legal, but tax evasion is expensive. We are not going to go through that route. We have various legal means that you can avoid paying tax. Another example is this. Another example, let me give you another example. Foundation. Many rich people you see today, they have foundation. Some of you think that they have foundation because they want to do charity. No. The reason why a lot of people have foundation is not because they want to do charity. It's because the law allows you to donate. So it's also part of the legal deduction now. As a business, the law allows you to deduct some certain percentage of your income as an expenses. So it will be recorded as an expenses. Let's say, for example, now you can take out 2 million or 10 million from your income and donate it to charity. And the law will see it as an expense. So the law allows you to take it out and you record it as an expenses. You donate it to charity. Then that charity, you can now use it to do anything that, any good thing, any goodwill that you want to do. But there are some people too, if they donate to charity, they will now go to backyard and go and collect. Let's say, yes, you donate 10 million to charity now. And just give you some expo now, what some person does. But we're not going to go that route actually. You can donate 10 million, you go through the back and collect 8 million and go and enjoy your life. Why is only 2 million that is in the foundation? But the point is this: the reason why people have foundation basically is not because they really want to do charity, it's because they don't want to pack all their money as tax and pay to the government. Since the government allowed them to deduct certain percentage of their income as expenses or as donation, so you can donate. That's another way that you can pay less or reduce tax. Also, I think another strategy is this: prepare for audits before it happens. Now, business audit or tax audit is not something that happens immediately. Most of the time, tax audit happens when there's a red flag. Once there's a red flag, it will trigger audits. And one funny thing about audit is this: they can audit you. I think I mentioned it in passing before. They can audit you for the past 5 years. You can tell you, go and bring your 5 years record, accounting record, go and produce it for them to audit. If you don't have proper record, you've entered one chance. So that's why you must have an organized record, and you must consistently make sure that you are filing you're also doing your annual returns, your tax filing, you are consistent with it. And also be able to also defend your record. Clear explanation for your income source. And this is one of the ways, or some of the ways, that you can use to be audit ready at any point in time that the tax authority decide to come knocking at your door. Then compliance step to avoid penalty. There are steps you need to take into consideration. There are steps you need to take into consideration to avoid penalties. Remember, I mentioned that when we talk about taxation, taxation is broad. Penalty is part of taxation. It's part of taxation. Now, these are some steps that you can take as an individual or as a corporate entity to avoid the tax penalty. Number one, register properly with relevant tax authority. Make sure that as an individual, of course, everybody must have their TIN number going forward. Also, too, as a business too, you must also have your TIN. And it has been said that getting TIN is not easy. I've already gotten my own TIN. You use your NIN, you get your TIN. But if you're having issues with it, you can reach out to us. We can guide you. But I've gotten my own. You can just use your NIN, and you go to the website that skip my memory. You go to the website, you just put in your NIN and put in your name, your date of birth, and so your information, and then you get your TIN. So you must be properly registered with the tax authority. That's not the way to avoid penalty. File your return within the statutory timeline. There's a timeline, a deadline for you to file your return. For example, VAT is every 10th of every month. For companies that collect VAT, is 10th of every month you have to file your VAT. Then also for paying company that deduct pay from their staff salary, you have to file your filing. I think the deadline is 21st of every month for you to do your file. So there's a deadline for your filing. Pay your tax as at when due. Don't be smart. Don't be smarter than the government. Pay your tax as at when due. You can only be smart when you work with the tax experts. That one is allowed. Then maintain verifiable record. Make sure you keep verifiable record. Even though I say you should get an exercise book, that one is just a local one, but make sure you get a record that is verifiable and that can stand the test of time. So you can get our tax template. Report promptly to tax notice. Once the tax authority notify you to pay your tax, respond promptly. And also, the last but not the least, seek professional guidance when needed. Seek professional guidance when needed. As I mentioned, we are here to guide you. And for some of you who are sending message, how can you reach out to me? DABA, reach out to DABA. That same group that you are in there, there's Root. Root is there. Reach out to Root. When you reach out to Root, definitely you will get access access to me. So from that, but you reach out, you can reach out to us. Reaching out to us is not actually a problem. Lastly, before I leave, penalties, interest, and backstop demand are going to be regular. They are going to be regular now going forward. Penalties, paying interest, and audits, tax backlog demand or tax demand, definitely they are going to be regular occurrence as we go forward. So I think so far, I think my time is almost up. Like I said, one session is not enough for us to cover everything. But nonetheless, we are going to have a core class for those who are going to be interested. There's going to be a core class where we are going to guide you for about 8 weeks or there about 8 to 6 weeks, 6 to 8 weeks. We are going to guide you and teach you step by step, one on one, how to identify your relief, how to compete your tax, how to pay less tax. All those things we are all going to teach you in our core class, which is where we are going to have that time for us to really have take this discussion further. So thank you so much. I'll be waiting. My colleague will take the second part. I'll be waiting for your questions at the end of the webinar. So thank you so much.
Okay, that was a great one. Thank you, Momo. Wow. Wow, that's expertise at work. Uh let's not even waste time. Let's go to thank you a lot. Thank you, Momo. Really appreciate. Thank you so much. So I think I know you're not confused. I know you are getting the education you need as a business owner, as a CEO, as a freelancer, as a trader. So those of you who are crypto traders and business leaders, you need this thing so much. He's been talking about a cohort program, but I want Akin to step in now and do justice. A lot of you, at the end of this class, I think there'll be about 3 or 4 categories of people. Uh, the number one people will be those who are business professionals, freelancers who are saying, okay, I think I want to get more education on this and sign me up on the cohort program. I want to know how to get into this. Okay, let's get into this. Let me learn this tax education myself. Let me be able to do my filing myself. After all, I'm just earning this amount of millions. There'll be those of you who will be saying, okay, I don't think I have time for this, but I will need a one-on-one professional guidance on how to go about this, especially for my business and for my finances. So we are here for you, okay? The DABA tax and business law community. And there are those who, at the end of the webinar, will say, no, I don't care about all this. Anything will happen may happen. And maybe in future, they have a problem with the tax authorities. And the moment you start having a problem with the tax authorities, let me tell you one truth. They will bill you. They will calculate. And I'm sure Akin will talk about that. There was a time we needed to pay something, and they will say, okay, if you have to pay, they will penalize you, and they will make it see 5 times or 2 times of the amount you are paying, you are supposed to pay, and report and all those things. And they'll be calculating it per day until you are out of that problem. Okay. And uh and the final ones will just be the ones who like no man no say make I dey go. So I think maybe just 3 or 4 categories. So let's welcome Akin. Let him do. I think we're about 60 of us here now in this class. And if you shared it with your friend, you can still share the link and let them get some. So Momo, I think you will stop sharing so that Akin can take off from here. And so are we ready for the second session right now? You can see the event was given to you free of charge. Okay. Courtesy DABA school and DABA tax. And so we're having we're having this community so that business leaders, entrepreneurs, everyone, we open that group up for conversations. Okay. That's why I was asking. We would like to also know what kind of business. So you now have some of you even come for structured do-it-yourself programs like that. So, Mama, please kindly stop your share so that Akin can take off from here. And Akin, welcome. Hello, Akin.
Yes, thank you, Chris.
All right.
Thank you, Barrister Momo, for that insightful session. Please, I want everyone to confirm that they can hear me clearly and they can also see my screen.
Okay, so I'm not sure we can see your screen yet. Uh, let
How
me.
about now?
Are you the one doing understanding tax type? Because let me make you a
Yes. So this is the part two. Yes,
Okay. Understanding tax type. Okay.
yes, exactly. I was not sharing the screen all along,
Okay.
so there's no
Okay.
need for Momo to stop sharing.
All right.
Okay. I just want to congratulate everyone on this call because you are attending this webinar at the relevant time. At the time where a lot of people are confused about what the new tax reform is all about and how am I going to get tax as an individual, even in my company. Am I supposed to upgrade my business name to limited liability company, or am I supposed to remain the way I am? I know that there's a lot of question that is begging for answer in the mind of everyone. So, but before I proceed, I would like everyone to put on the chat box what our objective from this second session is. I know that we have been listening to the first speaker, and he has also clarified some of our doubts and some of our objective. So, but I know that we still have some other objective. So, I would like us to put in the chat box what our objective for this second session is going to be like, so that we are going to be addressing them as we speak all along. I will just give us few minutes, maybe 1 or 2 minutes to do that. Then we are going to look at it and see what our objective for this second session is, because we would like to address everyone objective, just so that we are fulfilled at the end of this webinar. Thank you. Like I said, I'll be in the chat box to be looking what our objective is, so that we'll be addressing it as we move.
Okay, guys, let's go. Let's get that ready. Let's get that ready. Okay. If as a CEO, uh I want to actually know the way now to go. Okay, with all that Momo has shared. Momo shared a lot of stuffs withholding tax, PIT, VAT, and all those things. Okay. So where do we go about now in the full applications of all this? So everybody put up your write-up. Remember, this is an interactive class, so we don't just want it to be a one-sided stuff. Let's be sure that you're getting what we are talking about and not just watching us. Okay. Let's get that.
Thank you, Chris. I've seen someone that say we should try to do a bit of a recap of what the first speaker have spoken about. Okay, that is noted. Please, I want us to keep this coming so that we can address it. In few seconds, how do you account for transaction done via USSD, POS, and ATM? Okay, that is another objective that Blessing Obi Monso, sorry if I pronounce this wrongly, wanted to address. Okay, that is well noted. Please keep this coming, keep this coming. This is 9:16. By 9:17, we're going to stop. Buying and selling cryptocurrency bulk and bulk. Okay. I didn't catch up with the first session. Is the tax monthly or yearly? This can more explanation be given in regards to crypto trader? Okay, how do you account received from other for a purpose via personal account? Okay, great. These are interesting objectives that we really want to fulfill in this class. Okay, thank you. That is to tell us that is to show that people are following what we are doing here, and we are not just wasting our time. And I do hope that we are going to appreciate this session at the end of this webinar. Okay, so I would like to proceed understanding the tax type. So in understanding this tax type, we are also going to be fulfilling some objective like you have requested for it. Is it yearly or monthly? Okay, so Now, we have different type of taxes. We have the consumption taxes, which is majorly value-added tax and withholding tax. So, value-added tax, this is VAT, and withholding tax, WHT, that is consumption taxes. We have the employee taxes. This employee taxes is called pay as you earn. So this pay as you earn is usually deducted from salary. So we're also going to be breaking that down in the subsequent slide. So we have personal income tax. Personal income tax has to do with people that are in employment and people that are self-employed as well. So we're also going to be breaking that down in our subsequent slide. We have the corporate taxes, which is company income taxes. So this has to do with companies that are limited liability company and PLC, that is public liability company. So these are the overview of the type of taxes that we have, and we are, like I said, let us take this one after the other. We have the value added tax. Value added tax, like its name implies, it's actually a taxes on the value you add on a particular services. So I know that at one point or the other, when we want to sell our services or when we want to sell our product, we add some value to it. And the taxes that are going to be charged on the value you add on these services is what is called value-added taxes. Currently, and even going forward, the rate is 7.5%. So you are going to be applying 7.5% on the value you add on a particular services. I know that in the law there are some services that are exempted from these value-added taxes, and there are some thresholds that have been provided by the tax authority that, okay, if you are under this threshold, previously this threshold is 25 million, but the new tax law has set another threshold, which is about 100 million. That, okay, if you are under 100 million, don't charge VAT. If you are above 100 million, charge VAT. I know that in our cohort, we are going to be further breaking down this, how this applies, because some services are exempted, while there's something we call input VAT. This input VAT are the ones you pay when you purchase this item. You are expected to use this input VAT to reduce the one you are going to charge when you want to sell back this item after you have added your value. So we are also going to be discussing that when in our cohort classes, because like my colleague has rightly mentioned, this is going to be a whole lot, and it's not something that we can actually uh, finish discussing in one class. Now we have the employment taxes, which is pay as you earn. Like its name implies, pay as you earn. You need to be paying this as you earn. Like, for instance, as an employee in a company, the moment you are paid a salary, you are not, what you are earning is actually the net. It's actually the net of taxes, because your employer has been appointed as a collection agent to charge you these taxes before they give you the net income. So your employer now are now mandated to now remit these taxes to the relevant internal revenue services, like say Lagos State Internal Revenue Services or Ogun State Internal Revenue Services, depending on where you are residing. So this is what pay as you earn actually covers. I know that in the previous tax regime, you want to say that, yes, I paid pay as you earn. Why should I still pay again? I mean, but this new tax law has made us to understand that the taxes that are deducted by your employer is actually an advance payment of income tax. What that means is that you still have the obligation to file what we call personal income tax self-assessment on or before March of the following year. Say, for instance, you are working with a telecommunication company. I don't want to be specific here. From January, they deducted 200,000 naira from your salary from January to December. By March of 2026, on or before March 31st, as an employee or as a business owner, you are now supposed to collate all your other income that you have earned from other sources, and file them with the tax with the relevant tax authority of the state you are residing with, not where you are working. It's possible that you reside in Ogun State and you work in Lagos. It's possible that your business is even on the internet. So your tax in this case are going to be paid to where you reside. We have the corporate income taxes. Corporate income taxes, companies have also been given exemption. Exemption in the sense that if you earn less than 100 million, what the law is requiring you to do is to file. The law may not require you to pay company income, provided you file on time. You file at the due date. And the due date is going to be 6 months after your year end. For instance, if your year end is 31st December, so it means that 6 months after your year end is going to be on or before 30th of June of the following year. Because if you fail to file at this deadline, you are going to lose that. Exemption. So these are some of the ways this tax law are actually going to come into play. So, but I know that in our cohort, we are going to be further breaking down how you can even file these taxes yourself, whether you fall into the tax bracket, whether you earn up to 100 million or you earn above 100 million. And we are also going to be explaining further how to identify whether you earn revenue or not. Because some people, for the fact that money goes into the company account or your individual account, does not necessarily make it a revenue. I know that a lot of people are making this mistake that once money goes into my account, then that has become an income. No. Like my colleague has rightly mentioned, if someone gives you an item or someone gives you some money, does this account for revenue? No. But in our cohort, we are going to further discuss on how to determine whether you make revenue or not. Again, there's no way we want to talk about tax without talking about accounting, because there's some accounting standard that have actually discussed how revenue is being earned. At what point should I recognize revenue? At what point should a revenue now belong to a company? Like for instance, like my colleague mentioned earlier, someone that has gotten an advance payment for a service that I have not rendered. Am I going to say I've earned revenue like that? We are going to be throwing more light to this in our subsequent cohort classes. Again, value-added taxes, like I've mentioned, you went to a restaurant, the restaurants have added value to the food they bought in the market. But if you went to the market, you went to go and buy a raw food, a raw food item. No one is expected to charge you VAT on this item. As a service provider company, you went to the market, you went to buy printer or you buy furniture previously. If you pay VAT on all of these items, they are as good as gone. But in this new tax law, the tax law has mentioned that, okay, the VAT you pay to a vendor that helps you to buy furniture, that helps you to buy printer and all of that, this VAT is regarded as input VAT. Keep their record. By the time you are offering your services, you want to pay your services, you want to sell your services, you can use the input VAT you are paid while purchasing your furniture and printer. You can use it to reduce the VAT. And what this does is that it's going to put more money into the pockets of individual and company. So I want to say here that not everything about this new tax law are actually bad. So because some things are actually good in this tax law, like I mentioned earlier, value-added tax is still 7.5%. Nothing is increasing. In this slide, we have made a scenario about you going to the restaurant. So, like I said, because the restaurants went to the market, they bought this raw product, this raw rice, raw beans. They added value to it by cooking it, by adding some other aesthetic to it. That means they've added value. So what the law says is that, okay, you went to a restaurant, you purchase food, 10,000. What the law is saying is that, okay, add 7.5 to the value of that item, to the value of the food. Again, the 7.5% on 10,000 is 750 naira. The 750 naira does not belong to the restaurant owner. It actually belongs to the government. So if you are a restaurant owner or you render other services, you have been keeping this 750 naira to yourself. I can tell you that you are making a lot of mistake. You are expected to remit this to the relevant tax authority. In this case, it's going to be the Nigerian Revenue Services. So again, it's very key that we also remit these taxes at the appropriate time. The appropriate time in this case is going to be the 21st of the following month. Say, for instance, this 750 naira you collected it in December. By 21st of January of 2026, you are expected to remit this value add, this 750 naira to the Nigerian Revenue Services. And again, this comes back to the question of whether is this tax a yearly or a monthly. So, like I said, some are monthly, while some are yearly. Like for value-added tax, this is a monthly tax. So, but how do you arrive at this 715 naira? How do you arrive at this value-added tax? These are some of the things we are going to be discussing. And the law also provides that for some value-added tax, their remittance date is on the 14th of the following month. We are also going to be throwing more light into this in our cohort class because in the interest of time, this is not something we can actually fully discuss here. Okay, so for your employment taxes, this is actually the summation of all the income you earned from your salary job. Like you might earn bonuses, your leave allowances, and all of that. These taxes are going to fall under the pay as you earn taxes. And the law has appointed the employer. Like, for instance, the telecommunication company, the law has appointed the telecommunication company, who is your employer, to collect the taxes on their behalf and remit same. So if you are a business owner here and you have not been deducting this pay from your employee, well, I want to tell you that you might be making a mistake here. Or even if you are a business owner, you have been deducting it, but you have not been remitting it. I can tell you, the government, starting from 2026, they are putting in some stringent control in place that is going to be aided by technology to be sure that you are remitting what you are collecting from your employee. Because let me tell you that this payee that we talked about actually belongs to your employee. You are just an agent of collection. And by the time you did not collect this payee from your employee, who is going to bear the brunt? I can tell you the employer is going to bear the brunt. We have seen so many companies levied millions in hundreds of millions for the payee they did not even collect. Because the law says you should collect it and you decide not to collect it. You come and tell me the reason why you did not collect it. So while I understand that there are so many school of thought about government collecting payee and not doing anything with it, well, I know that by the time every one of us here, we are paying tax, we are going to demand for more accountability. So this slide I've actually explained to us some of the ways we can arrive, some of the relief that is available. Now, this new tax law has mentioned that the rent that you pay wherever you live, we are going to grant you 500,000 of such rent, provided that you pay more than 500,000. So now, this is how it works. If you pay a 1 million naira rent, the law is only going to grant you a 500,000 relief as part of the relief you are entitled to. If you pay 500,000 naira in rent what the law has mentioned is going to grant you 20% of this rent as a relief. So if you pay 500,000 naira in rent annually, just know that the relief you are going to be entitled to is just 50,000 naira, which is going to be 100,000, which is 20% of the rent you paid. So again, there are other relief that you are also entitled to, depending on whether you are doing this. Like if you contribute to a pension fund, the law are going to get the amount you contribute to a pension fund and reduce it from the tax you are supposed to pay. If you contribute to a national housing fund, the law is also telling you that, okay, the amount you contribute to the national housing for NHF, bring it. We are going to reduce it. The law is also saying that the amount you also contribute to HMO, the Nigerian Health Insurance Trust Fund, bring it. We are going to use it to reduce the amount you are going to pay. Life assurance. I know that Nigeria don't believe in insurance, but I can tell you this is the right time for you to start believing in life assurance, because there are so many uncertainty in our environment. I know that in Nigeria there are 1,001 ways to die. So I want to urge us, let us start contributing to life assurance, because one of the benefits of life assurance is that the premium you are paying for that life assurance is actually tax deductible. You can use it to reduce the tax you're going to pay. The interest on mortgage, if you go to a mortgage bank to collect a loan, the interest you are paying on that loan, the law say bring it. We are going to use it to reduce the tax you are going to pay. So as a freelancer, as a consultant, creator, side hustler, business name holder, professionals with multiple streams of income, provided that you are still registered as a business name, this is how you are going to be taxed. Is this rate? This is the table that is going to govern how you are going to be taxed. So, provided that you are all of these things that you have mentioned, and you did not register as a limited liability company, the only exemptions that you are granted from is 800,000. So, but if you earn more than 800,000 and you are not a limited liability company, you are an individual, you are a consultant, the only exemptions that you are granted from is 800,000. So there are other set of people that are also exempted from tax. Like if your income alone is just your gratuity, your pension income, you are also exempted from tax, because obviously this pension has also been exempted from tax all along. And while you are in active employment, you are paid your tax. So for pensioners, you need not worry about this tax. In the interest of time, we need to move fast. We have the corporate income tax. In the corporate income tax, like I said, if you earn 100 million and below, and your assets, which is your vehicle, your furniture, and is below 250 million, I can tell you what the law is saying is that prepare your financial statement, audit your financial statement, and file it. You are not going to be charged any tax, other than you having to keep the government abreast of this responsibility about you charging, about you preparing your financial statement, carrying out a financial audit, and also filing this financial statement at the right time. But the moment you did not file at the right time, I can tell you are going to pay tax just like every other person. So that is how the tax promat is a technology that has been designed for us to file all these taxes. So again, there are other things that are also going to be exempted before you arrive at these taxes. Your business expenses, provided that they are wholly and exclusive. If the expenses you spent in the course of your business are wholly and exclusive for the purpose of business, I can tell you. But if you are using these expenses to probably go and buy food for yourself, go on a yacht ride, and all of that, the law is actually looking at you, your operational costs on the one used to run the businesses, these are also exempted. So it is also very important that we track our income. We also track our exemptions, because like I said, the law has given exemptions to certain income, has given exemption for you to deduct some expenses. And with cohorts, you're also going to learn how to estimate your tax exposure, because it's very important that you learn how to preempt the tax you are going to pay. It's actually for planning purposes, because you are going to be able to learn how much you are going to pay, and that will help you to plan properly your business finance. So I think at this junction, we have come to the end of this webinar. So I believe as a business owner, what we should be asking ourselves is, are we taking our accounting serious? Are we taking our financial audit serious? Are we paying? Are we tracking our expenses? Do we have evidence for all of these things? And are we doing are we noting the proper taxes to pay? Because I can tell you, some people are not even due to certain taxes, but they will go and pay it because they don't know. So, but I believe as DABA, that is DABA Tax and Business Community has organized this webinar, is to enlighten us on how we can avoid all of these things, all of this pitfall, and try to structure our business properly, on how to account for our income properly. Like I mentioned, not all the inflow that enter into our account that are income. So we need to be able to identify properly how this thing works. And this is exactly what we are bringing to you as a tax expert. Thank you. At this junction, I will invite the moderator to take over from here. I appreciate everyone's time.
All right, Akin, thank you so much. Please, before the moderator will take over, I just want to talk about something quickly, the bonus resources quickly. Number one is Expo. Let me give an Expo. My colleague, Mr. Akin, talked about rent relief. Rent relief. Do you know that as an individual, the law only permits you to deduct at best 20% of the money you use to pay your house rent, and the maximum is 500K. But you know that as a company, the rent you pay as a company is part of your company expenses. The law allows you to deduct it 100%. So you can see how people use company now to actually reduce their tax liability. So that's just one. The second is two. One of the reasons why you need an expert is this. A lot of people did not really understand how some of these things work. For example, the law says that company that are tax exempt, there's two criteria. Even though I mentioned that we've not seen, the regulation is not out, and the guideline regulation is not out. But there's something that is striking. There's two criteria before you can be tax exempt for that 100 million threshold. It's two. Number one, your revenue is not above 100 million. And number two, your set is less than 250 million. So in a situation where your set is more than 250 million, well, like I said, the guideline is not out. But there's a possibility that you're going to pay tax, because that two criteria, you have to meet it up with there. There are 200 million threshold and assets less than 250 million. Once your asset is above 250 million and your revenue is below 100 million threshold, then there's an issue somewhere there. Secondly, too, and I think so that is it about it. But nonetheless, like I mentioned, areas that we need to guide you, we are going to guide you. Areas that the law is still not clear, we are going to guide you. But these are some of the techniques that you should have at the back of your mind of how this thing works. So that tomorrow, you now go and say, I have my revenue is 100 million and below. Yeah, decide to come and pay tax. There are two criteria, and you must meet up those two criteria. So that's just how it works. Then lastly, I want to quickly show you people something. Let me quickly show you people something here. This is just so, Aki, can you stop sharing? Okay, quickly. So this one is one tax issue that I was involved in some years ago, just to show you people how this thing works.
We can't see your screen.
No, I'm coming. I'm not sharing yet. I want to show you how this thing works. Can you see my screen now? Can you all see my screen? Hello, can you see my screen? Hello, am I still audible? Can you see my screen?
Yes, we can see your screen.
Okay. So I'm trying to show you in practice how some of this thing works. You can see this is one of our clients back then. He sold a property. He sold a property. So he sold a property, and remember I mentioned to you, we want to talk about tax. Don't talk about tax. There's what we call CGT, capital gain tax. So this individual sold the property, and according to him, he was smart. He did not disclose it to the tax authority. The tax authority, they found out, and they sent him this notice. You can see from Kano State, Kano State Internal Revenue Service. They sent him this notice. Now look at what they say here. According to Kano State government, they said that this individual bought the property for 20 million and he sold the property for 800 million. This is because the tax authority, they have the power to assess. You get, they have the power to assess. So they said that this individual sold it for 800 million, that the gain the man got was 780 million. Therefore, his allowance was just 10 million. So the gain that he got is 770 million. Then the 10%, because CGT is 10%, that you come and pay 10% of the gain, which is 77 million. Just imagine the government want to take 77 million from, assuming it is true, you want to take 77 million from this individual. The man came to us. He cried. He came to us. He said, "Come and see. Oh, it's not possible. Come and help me out." And we got involved. We got involved with the tax authority. And at the end of the day, look at our resolution here. This is our resolution. Let me share our resolution now. All right. I believe you can still see my screen. The same Kano State government. So when we got involved as tax experts, we went to meet the tax authority, and after we provide our professional service, this was the conclusion. This was the conclusion. At the end of the day, we were able to convince the tax authority that look, this man bought the property for 300 million, and he sold it for 310 million. So the gain the man got is only 10 million naira gain that he got, not what the tax authority are saying. It's only 10 million. So the 10%, the 10% for the man to pay, for this individual to pay, is just 1 million naira. Just imagine. So this is the power of what an expert will do for you. But I hope there is no Kano State government official here. Let me just tell you people what really happened. If not because of our intervention, the man actually sold the property for that amount. He sold it for 800 million, sincerely speaking. Sold it for 800 million, because of 800 million. It's a property, of course. The government are not foolish. They know how much property costs in a particular area. So they know that for this particular property, in this particular choice location, cannot be less than this amount. But as expert, we came in and we are able to render our service and we reduce the amounts. And this was how what we actually arrive at the end of the day. This is what experts actually do for you. So I think, thank you so much. This is just a few things I just let me just pass across so that you know how this will work in practice sometimes. All right, Chris, over to you.
Okay. I don't even know where to start, but I know that we have a lot to now share, especially. So I think we have questions before we go into this cohort because we really want to be sure the people we are doing business with, we want to be sure the people who are learning, the people that want to learn from us, okay? Because we've created a 4 to 6 weeks cohort program. Entrepreneurs, business leaders that want to do this themselves, and we're saying they want structure. We've created the tax and business community cohort program. It's a combination. It's a combination of business law and uh, excuse me, give me 1 minute. Let me open something. Just give me 1 minute. Okay, so let me share this uh, so that you guys can see what we want to cover for the next 4 to 6 weeks. 4 weeks, and it's going to be a continuous community. So, Joel, if you have any question, I want you guys to you can drop your question. So I think we're starting this cohort in the next 1 week, Friday. I think we're starting next week, Friday. So you have the next you have the next uh-oh. I want to open this page. This page is not live. Okay. Copy. Okay, so we have two programs in one that I think will help anybody. Okay, I think we have two programs in one that will help anybody. But before we continue, I think we can have do we still have questions? If you have questions, I think you can drop them in the chat session, okay, so that we can actually just do some justice to that. So we have two programs in one that we want to offer to you people, to everyone. Number one is
Hello,
the
Chris. Sorry for interjecting. Let's take some questions.
okay.
Some person can call in. No. After you finish, some persons can call in. Some can be in the chats, and some we can give them the mic for them to actually talk.
Okay. Okay, so should we take the questions now?
No, finish up first. Finish up.
Okay, so you can drop your questions in the chat, and if you want to speak, you can actually just notify us by raising your hands up, and I will let you have the mic. So keep the questions coming. Are taxes paid monthly, annually? Good. So we're gonna keep them coming. So we have two foundational programs that will help you, and we're mixing them in one. Okay, we have business law for entrepreneurs and startup founders, your complete legal foundation to structure, protect, and scale your business. Okay, the goal of this program is to build an investor-ready legal foundation. So this is what you're going to be getting in this program: how to choose the right business structure, how to register your business properly, the 14 essential legal documents every business must have, how to protect your intellectual property. Okay, this so I will give you a story. I founded my business, my major company, Digital Abundance, in the year 2017. So I had these guys I reached out to. As a founder, I just like I have, this kind of, you have good heart. You are so passionate about your idea that you just want to get your business. That kind of, you are always excited about your business idea. So I gave one particular guy, his name is Silas. I said, okay, we're going to build a group company. I'm going to focus on the education. You're going to focus on exchange. You're going to focus on e-commerce. So you know what we did? I was one bringing the capital for the business. I was one financing the business. Okay, that's my boy Jesse. So I was on financing the business and financing registration, and now split share capital among everybody. I said, since you are going to take part of this business, take this number of shares. You are going to take this business, take this number of shares. Brothers and sisters, it took me how many million to settle that guy when it was time for me to go and talk to an investor. So when it was time for me to talk to an investor, later on we had problems. What was the problem? The people I shared share capital with, for them to be owners of the business, they were not doing anything in the business. I was one doing everything. I was one doing all the work. I was one reaching out to investor. I was one selling the product. I was one making the money. Their own is, if they like, one of them started his own similar business like that. There was no protection. There was no legal this thing. And all these things happened before I met Momo to become legal this thing in our company. And so there was a time I built a particular product, a particular crypto product. We're going to look for how to raise $200,000 around 2018, 19. So the next thing, they started looking at our books. Who are the owners? Omo, you don't share your company finish to 3 people. It cost me how many millions to settle. And when it was time to take the main decision, forget court case, so they will win you. We had to settle out of, meaning I had to call, we had to intervene, they had to call this person. The person that did not bring 1 naira for my company collected millions from me because I was doing obiebere. I was doing good heart. Let's build a startup for the future. And I shared my company before my company started because I did not understand what legal structure is. Okay? I didn't understand what legal structure is. Okay? Go meet mama. Mama says you come. Mama. Okay? Okay? And that thing pained me. I was cursing the guy, but while I was cursing the guy, I was paying money just to make sure he's free so I can bring in an investor into my company. There are certain mistakes some of you are already making, and there are certain mistakes some of you will make. So this is perfect for anybody. If you're a tech founder in your early stage, you're about to launch a business. Don't say you only know how to do developers. No. Don't say you only know how to do, but no, some of you know how to do, like me. I don't worry about my accounting because I have Aki. I don't worry about my taxes. I have Aki. I don't worry about legal matters. I have, from IP protection to several things. I just focus on my business. So what they do is they report to me. They tell me this is it, and this is that. So this is what you're going to cover. What is it? Who is this for? Business structuring framework. This is the business. This is the structuring part that you need. Okay. And these are the things you're going to cover in this cohort. Of course, this one we've already recorded this program. You can have access to it the moment you have access to the cohort. So we are doing a 2-in-1 package, and it is stinkingly cheap for anybody that wants to participate in it. And when I say stinkingly cheap, this is high level consulting level. These ones are already ready for you. Now, this is how this program is going to run. It's not buy a course and go and learn on your own. No. This one is ready now. If you want to start watching this one, it's ready, available for you. But this is where we are going to now, which is this one. Okay, this is now the one that is now the next for you. This one is DABA. This one will not be. We are doing this cohort live. This one I shared you now is ready for you. By the time you participate in this cohort, you get this other one for almost free, if not free. So, because it's a 2-in-1 program. Now, for these 4 to 6 weeks, Aki and Momo will run you through this following. What is the record? Stop overpaying tax by mistake. Choose the right structure. Record that protects you. Build an investor-ready foundation. Correct transactional descriptions. So that from week 1, this is what you're going to learn for 4 weeks first. Week 1, while you are learning that legal own, So make 2026. If I were you, I would make January and February the month I want to, because by January, tax filing starts. All these old tax things, they start. You have to start anything you're doing that will make you protect yourself for tax and legal stuff should be in January, February. So you may not be able to hire an consultant. I know what Aki and Co they charge for a year to put you on their payroll. Some of my friends in crypto, they use Aki, and I know how much it charges them for them to be on. But you can start. You can say, okay, I don't have all these millions to start hiring Aki. I don't have 10 million, I don't have 5 million to start hiring Aki. I don't have 3 million to start putting in to say, okay, do this thing for me. But I can learn these things and get the template. There's something they're going to give you called templates. That template is already a book on its own, that all you do is remove this, put your company name, put your business name, put your own name, and like that. So week 1, we're costing personal tax, payroll, and salary structuring. If you pay anybody salary in your company, you must have this. Week 2, the same thing, transaction description, invoicing and bookkeeping. Company income tax, week 4, VAT holding. The end of the program, this is what you're going to get. Practical tax computation templates, sample payroll, invoice, tax promax filing, compliance checklist. Now, so that before you go and even file your tax in that community, we'll give you assignment. The assignment is not 10 marks, so it's not 10 marks assignment. The assignment is that, okay, now that you have your business, you want to file for the end of the month. That thing you say you want to file, bring it in the community. They assess it for you and say, okay, this is good to go. Go ahead and do it like this. If you want to do it on your own, if you don't have money to hire, and you're a business person too, so you are combining this for creators, digital entrepreneurs, crypto, forex traders, freelancers, consultants, anybody you're running an exchange, and the facilitators are hacking. Me, I'm not teaching. Even me, I'll be learning there too. So if you want to join the cohort, this is what we are doing today. So we want to just get, even if it's just 20 people who are serious with this, because it's work. To be honest with you, this game is work. Is this only for companies? No, it's not for companies. It's for anybody who is a trader, freelancer, who is a founder. Do you need prior tax knowledge? No, everything will be explained to you in practical terms. Will I get personalized? The program is education first. You have to learn framework and template. Personalized advice can be on separate, but during the community, there'll be question and answer period, so that these people, you have access to them on it's stinkingly cheap. So if I were you, the first thing I will do today, let me get this right now. The first thing I will do today is apply for this cohort. We're asked, okay, should we do this thing for 300? I said, no, let's give it that entry level. Anybody can enter for this 6 to 8, so for this 4 to 6 weeks. So we just say $100. You have access to tax knowledge. You have access to legal knowledge. And this is what you can start ASAP. So this cohort starts next week, Friday. So we're giving you the opportunity to do that now. Now, I'm going to also give a final bonus, which I'm going to write here. A final bonus. And this is the final bonus, which I'm writing on my own too. Okay? I'm not taking permission from anybody to do this. Okay? This is the final bonus. Anyone who is going to make payments today to Digital Abundance, okay? We're going to drop an account number for those who want to participate. Instead of paying these $100 that we put in there, okay, we're going to drop an account number now, okay? All you just have to do is pay $100K. Anything after today is $100. I'm giving you that founder, that bonus, like enter this cohort by all means. Yes, it's end of year. We spent money for Christmas. January is coming. I'm saying forget anything you're doing for next week. Carry 100 instead of paying $100. $100 is about 1,000. Is $150,000. Sorry, 150,000 naira. I'm saying today, for those who are doing it between now and this night, okay, pay 100K and I give you instant access into the community. So they're going to put you into the cohort group. People who are founders, business leaders are saying, I want to learn these things. I want to do it myself. This is what I'm doing. We're giving you that discount today. So that's like how many percent discount? Okay. How many percent discount from that? I think that's over 60 or 50 or 40% or 30% discount. Okay. So the thing now for you is simple. Okay. Take advantage of this. I'm going to drop an account number. I'm going to drop the WhatsApp number you're going to interact with. So Momoh, please send me root number. so that I can just put it here. Once you make your payment, just send a message to Ruth on WhatsApp. Okay, you don't need any this thing. Just send a message to Ruth on WhatsApp. She's going to add you to the special WhatsApp group for this cohort program. So instead of paying 150, which will start from tomorrow, next tomorrow, oh, I'm coming back next week. Today, even if it's 5 of you that are paying 100K, pay 100K and get access. Then you get specialized training for these 4 to 6 weeks. Now, after the program, okay, Chris, after the program, what continues? You are already in the program. So the 4 to 6 weeks is learning. After 4 to 6 weeks, you're still in the program. And what are you doing? Monthly, okay, every month. Oh, where's my this? 4 to 6 weeks. Every month, once in a month, Aki and Momoh, we have a specialized session with that's like a Q&A. Okay, so as you're filing these things, before you know, you're doing things on your own. You're filing on your own. You're doing your TIN thing on your own. You are paying on your own and no issues. Now, whenever you have maybe any major issue and you think that you are confused, we're not closing the cohort. The cohort is still there in that WhatsApp group. You can come and say, okay, please, oh, I had 100 million, but I don't know how this thing is. Just carry everything and put inside this. So I'm going to drop the account number right now for those who are interested. These guys are busy guys. They have companies they are consulting for. But I said, no, DABA has to take advantage of this by making sure that we equip and we educate our community with this. So let me drop the account details so that you guys can jump in on immediately. Okay, so it's where's that? So if you have any questions, I can start taking questions now. We can start taking questions now. Okay. So let me drop this. Make a 100K bank transfer to, you won't see it on the website there. So that's why I'm putting it here. So we just put that website there. Okay. So this is the account number. It's First Bank. Okay. Label it tax and business law community. This is the number. So for those who are paying today, I already gave you a discount already. Okay. Anything after from today goes back to $100, which is 150,000. So it's a 4 weeks, 6 weeks cohort program. And I think with that, you are all set. Okay. So be part of this private community and help your business, help your finances, and help structure your business. All right, it's time for us to take questions. So Aki, okay, I see people are here and they've been asking. So maybe you can take off from here, Aki, and start answering some of the questions. And if you want to ask questions, maybe you want to speak, you can actually just do your best by raising your hands up. The mic is open now. So you want to drive your bicycle inside my room? Okay, why not go to the other place? Yeah, Tom. Okay, are you there?
Yes, I'm there. I'm here, Chris.
Yeah, so I think
I'm just wondering, where do I start answering from? Because I can see loads of questions. That means people are really interested in this session.
Let me start with the first. Okay, Blessings, how do we sign up for the cohort? So this is the WhatsApp number you are going to message once you do your bank transfer. Okay, remember today you're just doing 100K. Okay, so the amount. That's
okay. Let's go. Woohoo!
Okay, so message Ruth on WhatsApp. Okay, and she will admit you into the cohort once you make it. Just send what you actually do is send proof of payment to Ruth. Okay, and you're doing that. Okay, so let's go ahead. I think I've answered Blessing. So Blessing, I'll be expecting to see you inside the group. Digital Queen is.
Okay, Chris, I don't know if you can read out the question because
That's what I want to
I'm a
do
bit
now.
lost.
So the
Okay.
second one, is it best to register as a limited liability company from Digital Queen? Is she still in this meeting or has she left? Is Digital Queen still in this meeting or has she left? I think she has.
Okay, but nevertheless, whether she's still here or not, I believe this question represents so many people's mind. Let us still provide a response to that.
Wow.
Yeah, so if you are running a business name or you've never registered at all, depending on the type of business you are running, I think it is better for you to register as a limited liability company because of some of the tax advantage that it has. Because as a business name, you are governed by the personal income tax, which means that the only tax you are exempted from is just 800,000. But if you register as a limited liability company, you are exempted from 100 million and below. That means if you earn revenue of 100 million and below, you are going to be exempted from company income tax. However, given that you register for a limited liability company and you are paying yourself a salary, your salary is going to be subjected to personal income tax. And again, 800,000 is also going to be exempted from that your salary. So in my own view, depending on the type of business you are running, for instance, if you are running, say, a fintech company that will most likely, if you are running a company that will most likely not hit 100 million in the next 5 years, because some people, all they are just selling is just something little things. Why not? Why not register for a limited liability company, knowing fully well that you are never going to enter the tax net? The only thing that you're going to be taxable for is probably when you pay yourself salary, your salary is going to be taxable under the personal income tax. Then another compliance obligation you will have is for you to prepare your financial statement and file with the Nigerian Revenue Services. So, which I think we are going to be throwing more light to it at the cohort, how to even do this by yourself. So, which means that do it yourself. You can even do this without even paying anyone. So, in my own opinion, and based on my expertise with many years of experience, we suggest that if you are running a business that you think will not even gross up 100 million in the nearest future, it is better you register as a limited liability company. Thank you.
Okay. Thank you, Aki. Thank you. So, as a landlord, should I charge VAT from my tenant, and is the rent going to be taxed?
Okay, that question
Right.
is a very insightful one. So for rent has been
Okay, so
expressly exempted. If you are a landlord, rent has been
yes.
expressly exempted from VAT. You are not expected to charge VAT from it. But the only thing now is your tenants are obligated under the law to deduct withholding tax on rent, which is going to be 10% of whatever they are paying you. So in this case, this 10% they deducted from your rent are going to be paid in your tax account. This tax account now is otherwise known as tax ID. And by the time you, as a landlord, want to pay your tax, maybe at the end of the year, like I said, maybe on or before 31st of March of the following year, the 10% your tenant deducted, you will now see it and you will use it to reduce the tax you are supposed to pay. So that 10% your tenant is removing is not a lost amount. It's not a lost money. So it's just like an advance payment of your income tax. I hope I've been able to answer that question. Thank you.
I think there's a second part to that question about paying tax on rent. Yes, of course. Rent is an income, so you're going to pay tax on it after you have deducted your expenses. Of course, your expenses there will include maybe you service you maybe you kind of repair in the house, roof is leaking, you fix the roof, when plumbing problem, you fix it. These are your expenses. So of course, once you receive rent, that's an income. You're going to pay tax on it after you have deducted your expenses. So I think that's the answer to your second part of the question.
Okay, so somebody said, are taxes paid monthly or annually?
Well, it depend on the situation. If it's a company income tax, CIT, you pay it annually, once a year. If it's your personal income tax, your PIT, you pay it once a year. However, for payee, that is pay as you earn, for those in salaried employment, which it is their company that deduct it. So the company is an agent of the government. You pay that one monthly. The company pays that one, remit it monthly.
Okay.
Remit it monthly. Then VAT again too. As a company, if you receive VAT on behalf of the government, you remit that one too monthly also. So VAT and pay as you earn for companies, as company deduct pay as you earn from their staff salary. Those two, you remit them monthly. But your CIT, company income tax, and your personal income tax, that one is yearly, once in a year that you pay it. But of course, they are going to calculate it, but it's once in a year that you are going to pay.
Okay. Okay, so the next one, how can a freelancer that is paid in crypto bypass the tax legally? Interesting.
Are you talking about tax evasion? Tax evasion, that one is risky, oh. And I don't think any professional that what is sought want to risk his license for doing that. So the only thing we can do for you is we can teach you how to structure it. Of course, please can you take that question again? Let me see if I can get that question again.
How can a freelancer that is paid in crypto bypass the tax legally?
Okay. Yes. Okay. So I'm still very much in line. If it's how you bypass it without paying, that is tax evasion, which I mentioned. There's no professional that works in salt. We want to go into that, but there are ways that we can actually help you to structure your income so that you can pay less tax. And in some instances, there are ways we can even structure it that you may not even pay tax at all. You get, probably maybe that is what you are trying to ask. But if it's to bypass it completely, 100%, that is tax evasion, which is not advisable, and that's actually not part of the services that we actually render. But we can structure your income for you so that you can pay less or reduce tax.
Hey, let me just add to what Momoh said. No, proud to now, crypto currencies are not recognized legally in Nigeria, and as a result of that, the governments are contemplating on whether they should collect tax on it or not. But with this new tax law and with the Nigerian Investment Security Act, cryptocurrency has now been legal in Nigeria. So any income that you earn through crypto investment, you are going to be is going to be taxable in Nigeria. And I know that with this new regime, some technology are going to be deployed to be able to track crypto income from whether decentralized or centralized exchange. So, like my colleague has rightly mentioned, what we can do is to help you structure it in such a way that you pay the the lowest possible tax. Yes, so I think that is the ideal thing to do in this case, rather than evading the tax totally. Thank you.
Okay, so somebody wants to ask a question. Mr. Chris, since you are overseer, do you pay yourself salary since some of your companies are in Nigeria? Does the tax in Nigeria, since you are overseas, do you pay your salaries in some of your companies are in Nigeria? Does the tax in Nigeria also affect you? Akin, you should answer that one. Well, to be honest, I actually earn more from I pay myself salary, yes. But you should, Akin, so there was something you mentioned about me not being in the country for a particular number of time and why I'm not due for certain tax. You want to mention that in this meeting?
Okay.
Yes, I
Okay,
don't.
so
Yes,
what the person is trying to ask now is the taxation of non-resident individual.
yes. It's
So
different from
taxation
my
of
company
non
not paying tax. My company pays. It's different from me.
yes, it's different from you.
Yeah.
So taxation of non-resident individual works in such a way that if for instance Chris has a company in the US and Chris does not stay in Nigeria and the US company is paying Chris, I mean, Chris is not going to be liable to tax in Nigeria, given that it's the US company that is paying Chris. So, but if it were to be a Nigerian company that is paying Chris, because as a result of that, then it means that Chris earned income from Nigeria because he probably just stays abroad, and a Nigerian company out of his own income they are paying him. So as a result of that, he is going to be liable to tax in Nigeria. However, if for instance Chris stays in the UK, in the UK, whether you stay in the UK, your income is coming from Nigeria, you will still pay tax too in the UK. So Nigeria and United Kingdom, we have what is called the double taxation treaty. So this double taxation treaty is going to give a relief of the portion of tax you have paid in Nigeria. So by the time Chris is going to pay his tax in Nigeria, he's going to deduct that relief from the tax he is going to pay in Nigeria, and he will pay the net. And most times they are just paltry. I mean, they are very small in this case. So that is the position of the law regarding taxation of non-resident individual. Although there is a rule of where you reside for 183 days. So, but this 183 days rule actually governs a non-citizen that actually comes to Nigeria to work temporarily. If a non-citizen works in Nigeria temporarily and stays in Nigeria for more than 183 days, then that his income is actually going to be taxable in Nigeria, because as a result of that, he's going to be deemed to be a Nigerian resident at that point. So that is the response to your question. Thank you.
In addition, just to reiterate what my colleague has said, if you earn income, if you like stay abroad, if you earn income in Nigeria, you pay tax on the income you earn in Nigeria. If you live in Nigeria and you work remotely in the US and they pay you in the US, they pay in the US. As far as you're resident in Nigeria, you pay tax on it. I think so. I think that is just my addition to it.
Okay.
Chris, let's allow some people to
All
to
right.
speak
Please go ahead,
before we
please.
can go back to.
Hello, good evening.
Good evening.
Yeah, good evening.
I don't know if anyone can hear me. Okay. So it's in respect of the landlord issue, for instance, or I already typed the question just now, though. If the landlord is not permitting the tenant to deduct the 10%, like I think Mr. Anki was one who gave that explanation, what is possible? What is the possible option there, or who will be at fault, or who will be held accountable? Hello, I don't know if anyone heard me at all.
Yes,
Yes, I can
we
hear
hear
you.
you.
So if the landlord is not permitting the tenant to deduct
The tenant.
withholding tax, yeah. So in line with the provision of withholding tax regulation 2024, the regulation commenced January 2025. It actually states that an individual cannot deduct withholding tax. But in the case where it is a company that is renting a place from a landlord, then they will deduct withholding tax. But if the landlord now is not saying, no, you need to pay me my money, you need to do this, because tax authority are going to go and harass the payer, not the receiver, then it then means that the payer will be the one to bear it. And there will be an agreement. In the rent agreement, it will actually be stated to say that the rent you are going to pay me is going to be net of all taxes. So which simply means that there's nothing that concerns me with your withholding tax and all of that. So to put it straightforward, if it is a company that is renting a place from a landlord, the company will have to deduct. But if it's an individual, in line with the provision of withholding tax regulation, an individual is exempted from deducting withholding tax from someone. So that is the issue around that. I hope I've been able to clarify your question.
Okay, thank you. Then my number two question is this.
Let me see how I need. There's something Akin said. I hope you get it. There are instances where the landlord will tell you that, look, oh, it's not my business. Pay me net. So once you pay the landlord net, is on complete money, then you're the one that will now go and pay from your own pockets. I hope you get that point. Yeah, I hope you get that point. Yes. Yeah. Same thing too with salary. For some of you here now who are going to be negotiating salary, let me also tell you this. When next you're negotiating your salary with your employer, tell them that the money they're paying you should be net. If you negotiate net salary, let's say your salary is 100K now, you negotiate net. At the end of the month, your company will pay you your 100K. Then your company will not be the one from their own pockets to now calculate how much tax are they supposed to pay. Then they will not go and pay it on your behalf. But if you negotiate gross, then the company will deduct the tax from your salary. I hope this example further buttress the answers we are giving you.
Yeah, it buttresses the answer, but the question now will be, does that mean the individual will not still pay income tax to the government directly? Like for the aspect of salary?
No, you will not.
Okay. Okay.
You will
then
not.
my
Yes,
second,
you will not.
Okay, my second question is this. With this new tax law, this issue of transfer, like for self-employed, currently I'm self-employed and some of my businesses, the company names have not been registered yet fully. So, for example, I'm having a confusion there. Must I start giving everybody who are to make transfers to my accounts to give me, what is it called? In the name, in terms of narration for during the transfer. Now, what do you do about some persons who do transfer from an ATM machine or a USSD code, or let's say a POS? How do one handle such cases for self-employed individuals?
Now, this issue of narration, I've been seeing a lot of content creators talking about narrate this, narrate that. The question is not narration. The question is you, the receiver. Now, what did you document? Remember, it is not just it is not narration that is the issue. You, the receiver, if you receive income for a service, what will you record in your own record? Because remember, you are the one that will go and self-assess and disclose to the government. It's not that if you go and if you go to pay your tax now or file, it's not as if you are going. It's not as if you are going to print your account statement and go and give them. No, even though they can access it if they want to. What did you record? What is your record? What did you state the money for? The money that enter your account. What is the purpose that you record for it? That is what
now,
counts. Yeah, that is
you
what
know
counts.
Why I'm saying this? For instance, I don't make, let's say 5 million naira for a service, and from that job, my gain should be around 500 to 600,000, for instance, for the labor charge. Now, so what's your possible advice on how do I handle such cases in terms of tax?
Now, this is just one of. So let's just assume that in a year, that is all the income you get in a year. 5 million, right?
Yes.
Okay. All you got in a year is 5 million. And after that 5 million, after all your allowable deduction, your profit is now what? 500K. Is that not so?
Yes.
Yeah, you're not paying tax then. You're not paying tax, of course. Remember, you're not paying tax on it.
Okay, the threshold for the person is 800,000.
Wait, let me even go back to it again. So, like, I'm missing something now. At this point now, you said you have not registered your company, right?
It's not it's not a company. It's just like I'm a service provider and I do solar installations, for instance. It's not a registered business, just a
Okay, you
personal
are
individual.
self-employed.
Yes.
You are
Yes,
self-employed.
self-employed. Yes. So, for instance, somebody pays me 5 million naira for a job to do a service. I know during your teaching, I've been on this call for almost 3 hours, 2 hours plus now. One of your
Yes.
teaching, you gave an instance where you said, if, for example, what did you call it now? Is it unearned income? That if somebody
Yes.
paid you for a service that you've not done.
Yes.
Okay, so I was now trying to see how do one balance or correlate it together with this for self-employed and unregistered business, just a personal account. So now what I'm saying is, like, now somebody paid me to do a solar installation. The cost of the entire job is 5.5 million. In that 5.5 million, my service charge, that is my cost of labor, is 600,000 naira. So how do I put such records? I'm talking of, and now that's at times you can have such a job like 3-4 times in a week or 4-5 times in a month. I don't know if you understand me. So what's the possible alternative, or what can one do?
Aki, can
Hey,
you go
let me
ahead and answer
respond
him?
to that.
Yeah.
Let me respond to that. I think I have a more appropriate response. So the thing is, in carrying out a project, it's a process.
Yeah.
I believe that if you want to be engaged in a project, you will probably send a pro forma invoice. So if you have to follow the normal process, you're supposed to send a pro forma invoice. That pro
Yes.
forma invoice is going to give them an idea of what they want to pay. Are you getting me?
Yes.
So if it is now a service that, okay, they want you to come and do it ASAP, or maybe they want to pay ahead because they don't want to spend the money, and
Yeah.
they sent you the money, something that will show that they have paid you and you have executed the project is called receipts. It's different from pro forma invoice, because the process is you issue a pro forma invoice first, you issue the real invoice. When you now complete the project and you get money, you now issue a receipt. So now, if for instance the question you're asking, that what record will you keep in a situation where you've
Yes.
collected money and you've not done the job? It's not for you to keep the pro forma invoice. I've not even issued invoice, or I've issued invoice, I've not issued receipt, which shows that, okay, I've executed the project. So that is the record you are supposed to keep, and you are supposed to be able to demonstrate that, okay, indeed I have not done this job, by you not issuing receipt for that project. So that is it.
Okay. Okay. Thank you. Thank you very much. Thank you.
Okay, we hope to see you inside the cohort. Okay, Joel, right? Who's the next person? Joel. There's Joel, there's Alexander.
All right. Good evening. Can you hear me?
Yeah, we can hear you.
Mr. Joe, you can go first. Okay. So, firstly, I want to ask, does NGOs pay tax? And if they pay, what's the process of filing for tax? And so that's one. Then secondly, you made mention of the filing. Initially, when Momoh was speaking, he made mention of dates for monthly filing of tax. So, I think I don't know if it was Akin that spoke again, and was talking about yearly, so that I'm a bit confused there. The monthly and yearly, which one is it, as in when and what is paid uh, to, I also want to ask a question concerning this script. So, for example, maybe I need to the money, you're selling it at a loss and calling back the asset card. So you have profit. You are running at a loss, or you are just breaking. You're selling at the exact price you bought it. So getting back the money, that this is not profit. Ask. if a company is paying rent and then the company is still under the threshold of 100 million naira income. So does the company still need to withhold tax for rent? So that's that. And then I also want to ask I just need a bit of explanation again because I was a bit confused and my network was also going off and on between this the VAT and the CIT. So these are two different payments, or I don't know. I'm a bit confused there because I understand these are attributed to company that need to pay this tax, and then when you are not up to the threshold of 100 million naira income, so you are exempted from tax. So what when you're filing, how do you file to show that? How do you file so that you're not paying this either CIT or VAT and the rest? And then I also understand there's something you also pay apart from like a filing fee or that. I just need a bit of explanation or clarification in these areas.
Okay, Aki and Co.
Although the line was breaking, I didn't know if it's from my own end.
It was breaking serious. It's not from your end.
I think it's from his end, but I think I was able to hear some of the things he raised. I will answer it one after the other. You raised question about the NGO, whether they are taxable or not. Okay, so NGO is taxable and they are not taxable. They are not taxable provided that they're actually running their charitable costs. They are running business within the confine of their charitable costs. But if you see an NGO now that have started having an investment, having a rental investment and all of that, that portion of income and on that rental investment are going to be taxable. But if someone gave an NGO that is into the girl child education and donated a certain amount of money, even if it is 200 million to NGO for a girl child education, so which is actually part of the noble cost for foundation, that such income will not be taxable under the law, provided that NGO do not go outside of their object clause to run a commercial business. They are not taxable. So then the law has done one thing, prior to now, the law actually restricts the bodies that you can actually donate to. But this tax law has actually leave it open-ended. Although we are hoping that the circular or regulation that will come after January 2026 are still going to give a certain institution or bodies that NGO are entitled to be done, that donation are entitled to be given to. But as it stands now, the law has left this open-ended such that you can actually donate to a noble cause provided. And that NGO is actually going to be exempted from income tax. So that is that about that. I don't know if you want to recap the other one. I think that's the only one I heard clearly.
Okay, so I was also asking when Momoh was speaking, he made mention of dates for filing, and he was talking about monthly. So he mentioned 27th for and 21st of every month. When the last speaker spoke, so I'm a bit confused. Is it paid? Are these taxes paid monthly or yearly? What? I'm a bit confused there because I felt
Things,
like there were two communication regarding the dates of filing. And then another
Okay,
question I also asked
things I was the
was
one that
um hello.
please go ahead. Ask your second. I've noted it. Ask your second question.
Okay. So another question I ask is if if for example you buy a crypto asset, it's possible that you sell it at a loss or you are set to fiat. So now when that happens, how do the government know that, or how do you present it? What's a way to be able to not have the government see it as an income? So because that's also a very tricky one there. And then another question is, when a company that is below the threshold of 100 million income per year, when they are paying rent, so are they also exempted from withholding the VAT for withholding tax for the rent, or they have to? And then another question is, when you're going to file, because I don't know, I vaguely understand that when you're filed, even when you're not, when you're tax exempted, there's some like a payment you also need to make when you're filing and all of that. So I was looking forward to um you touching that while you were speaking, but I didn't really get, or if it has changed in this new tax laws. I would also like to have an insight on that.
Okay, thank you. Well, that
I
question is
didn't
actually
see
very
the
numerous.
person that asked question. I didn't see your name, but your question is so much that you should be in that cohort.
Exactly.
Absolutely. Because these are great areas in the tax law that if we begin to explain it here, a lot of people are not going to get it. But just for the benefit of response and for you, we'll just touch base on it. I mean, so like the first question, is this tax monthly or annually? It depends on the type of tax. So if you are doing value-added tax, withholding tax, and PE, they are monthly. If you're doing company income tax, development tax, and your personal income tax, they are annually, and capital gains tax, they are annually. So that's about that. On the question of crypto trader, how are they taxed and all of that? Well, like I mentioned earlier, the crypto trader have been brought into the tax net, and they are no longer exempted from tax because crypto is now being seen as a legal um, asset, digital asset in Nigeria. So what that means, what the law has provided for is that whenever you make income and you make a loss, you need to net off your loss from your income. If you now have an income left, so it's that income now that will not be taxable. So that's the position of the law on that. On rent, I mean, if you earn less than 100 million and you rent an apartment, a company rent an apartment of 5 million, withholding tax on that rent, you're supposed to deduct it. So because you're not the beneficiary of the withholding tax, it's the person you are paying it to. So that's the position of the law on that. So, but I know there's still some other technicalities around these things that you have asked. But in order not to bog every other person down with time, we'll have to discuss that further in the court. Thank you.
All right, thank you.
Somebody asked, do pastors pay and tax? Have you answered that one?
Church don't pay tax. No, church don't pay tax because they are under NGO. They're registered under NGO trustees, so they don't actually pay pay tax. However, if the church is doing business, so this the answer to this is similar to what my colleague has already answered. If the church is doing business, definitely the church will pay tax. But ordinarily, if the church is only restricted to their objects, which is charitable cause, they won't pay tax, notwithstanding that they are getting a lot of money from their members. But once the church go and establish a school, own a business, of course, they'll pay tax for that business. Then yes, pastor pay tax from their salary. They are expected to pay tax because they receive salary. And if you are receiving an income, receiving a salary from an NGO, you pay tax. So yes, pastor pay tax. Or pastors are expected to pay tax, even though I don't know if they're actually paying, but they're expected to pay tax.
Any other person that we've not? David? Has David spoken? Or who again? I'm seeing David's
So
hands.
we have David and Joel. So David and Joel, our time is fast spent. Let's just take David and Joel.
All right.
All right, David, unmute and answer a question. All right, if David is not asking his question, then Alexander, can you go ahead and answer your question? Alexander, go ahead. Okay, David, David, you can go ahead now. I'll unmute you.
If we don't have time again, please go ahead and speak.
Okay, let me answer Mr. Joel. Mr. Joel just typed his question. Can tithe directly? Sorry that I'm sorry, it's somehow funny. Be recorded as an expenses that can be expended from taxable income. Okay, Mr. Joel, tax is not deductible. If you pay your tax, if you pay your tithes, that one is your personal expenses. The law does not permit you to deduct it as to deduct it. So it's not tax deductible. If you pay your tax, that one is from your own. It's from your income, and your income will still be taxed. It's not part of what the law allows you to deduct before you can pay your tax. I think that answers your question. Tithe is not tax deductible. So it's an expense, it's quite all right, but so let's say, for example, now you receive a salary of 100,000 naira and your tax is 10%. So the law will not allow you to take out that your 10% before they tax you. No. They will tax your 100,000. They will tax your 100,000. You pay tax on that your 100,000 naira. So that is why I say it's not tax deductible. All right, Mr. David, I've seen, and I don't know why you can't speak. I've already unmuted you. I've already unmuted you, David. So let me see your question now.
Can you hear me now?
Yes, I can hear you now.
Okay, so I work for a company, they pay me salary. Okay, but because of the nature of the job we do, we get payment from customers before we now buy materials from the payments we got from them. After doing the job, we can now make our profit. So, and the company, I remit the total income we got from the customers at the end of the month. I remit it to the company account. So I'm now asking, how can I go about it so that I will not be taxed for the money that comes into my OPay account on behalf of the company?
All right. So, like I mentioned, if there's anything, if I thought you did not remember anything from this webinar, one thing you must remember is income. Is income that the law tax. Income. And I mentioned what income entails. Now, if you receive payment on behalf of your company, which is not supposed to be, quite all right, however, it is not an income. That is not an income for you. It's money for a particular project. Let me, in another form, let's say your uncle, now imagine your company now is your uncle. Your uncle live abroad. I'm sure you must have uncle abroad. Your uncle abroad now sends you money into your account that use this money and go and complete my project for me or handle my projects. That is not an income. However, keeping record is very important because, like I mentioned to you, the bank will notify the tax authority. So you now make sure that you have that record. Find a way to keep that record, personal record, by yourself, so that if anything happens and the tax authority, one way or the other, invite you or reach out to you, and they say, "Look, so money enters your account. Come and give account of it. Come and defend it." Then, of course, you now, from your record that you have, you tell them, "Oh, this money was paid to me on behalf of my company for us to carry these projects. And after we have already carried the projects, we remove the expenses. What is left, I transfer it to my company. I transfer what is left to my company." So I think this one is a very straightforward something. So just keep record of it. Then secondly, too, it is not an income. You didn't receive it as an income because you did not render a service for it and collect the money for your benefit. It is your company that rendered the service. So it is your company that will give account at the end of the day. So not you, but you are going to defend it that the money enter my account is for a particular project, and this was the purpose for the money, and that's just it. And I don't know if this answers your question. Hello, David.
Now, can you hear me?
Yes, I can hear you.
Okay. I said the payment is not just a one-time payment. In a day, I could get up to 5 to 10 payments from customers we do work for. So from the payment they make, I'll buy the materials to do their work. After doing the work for them, at the end of the month, I will now remit the part that is profit to the company. You understand? But all the payments come into my account from customers. You understand? So do I need to worry about that, or I shouldn't worry since it's not my income? I don't know if the tax authority will have anything on me.
Well, on the one hand, I would say that you should be worried, but not to be worried to the extent that you're going to be afraid. I don't know if that makes sense. You can be worried without being afraid. Worried because ordinarily, operationally, normal process and normal procedure, such money should enter the company's accounts. That is all the normal company procedure. But there are exceptions in law. There are instances where, due to one reason or the other, the money cannot enter into the company's accounts. Maybe the bureaucracy involved in going to the bank to withdraw the money before they send it to you. That could be maybe an exception. But you should be worried because the tax authority at any point in time can call you if need be, if there's any red flag that made them to have to call you to come and give account of it. So on your own part, make sure that you have a record of this thing. This one that enter into my account, if it's from so person for so purpose, and this is how I spent the money. Have your own personal record for your own for your own good, because the money enters your account, and where you cannot give an account. Let's say in the next 1 year, like I mentioned, you see, one funny thing about tax is this, or tax audit is this: they may not ask you the question today. It could be in the next 5 years that there might be a trigger, something that will make the tax authority. There might be a red flag about your account. The tax authority will now call you and start asking you questions. You get, and at that point in time, if you don't have record and you cannot defend it, then you have yourself to blame. So the answer is straightforward. It is not an income. So you don't have anything to be afraid of in that regard. Secondly, make sure that you keep your own personal record. Buy an exercise book and be recording it. Because going forward, this thing is not going to be funny, sincerely speaking. Tax issue, if you have conversant with tax issue all over the world where they take tax seriously, tax issue is not a funny issue at all. It's not a funny issue at all. So just make sure that you have record for this.
Yes, I have a ledger where I record both the inflow, money used for as in the money that I receive, what was used to buy material, and what is left as profit, which the company audits me on monthly basis. Then I'm not paying the income to them. So I have the record in my office.
Then if that is the case, then you are home and dry. You have nothing to worry about with regards to paying tax on it. You get. So you have nothing to worry about in that regard. But the other worry is you can be invited to come and answer questions for it. But of course, if they call you, of course, you go with your record and you explain yourself, and you are good to go.
Okay, thank you very much.
You're welcome. Our time is fast spent. We only have 5 minutes to 11 o'clock. I think in the next 5 minutes, we are going to call it a day. So we're only going to answer the questions we can answer within the next 5 minutes. Within the 5 minutes. Somebody is asking a question here. For someone that operates multiple personal bank accounts, how can I file for personal tax without overpaying? The answer to your question is record keeping. Is record keeping. Make sure that you have a record of the inflow into your accounts. And at the end of the day, you now need to compute your total inflow from all your bank accounts. Remember, we have BVN. So the tax authority, they have access to your BVN. So they can use your BVN to know all the accounts that you have. So what you should do is, if money, of course, many of us have more than one account. All the money that enter into all your accounts, you have to compute them together, calculate everything to now know how much it is. Let's say, for example, now you have three bank accounts, and each month 100,000 naira enter into each. 100K, 100K, 100K. So in a month, 300K enter into your 3 bank accounts. So 3 times 12, I don't know, 3 times 12 will now be, so in a year, let's assume that the inflow is constant, 100, into each account. So in a year, your calculation should now be 3 times 12, which is 3.6 million. So your total in a year is 3.6 million. Remember, this is just an example now. But if we now go technical and start breaking it down, we can now know the actual tax that you are going to pay. So ordinarily, on a general note, on the surface, 3.6 million is what hits your account in a year. Forget about that, you have multiple accounts. Calculate everything together. It gives you 3.6 million. Now, 3.6 million means that you're already within the tax brackets. So that 3.6 million, you're already in the tax bracket of, let's say, 18% tax brackets. Remember, we have not done the breakdown yet. When we do the breakdown, that's when you will know the actual tax you're going to pay after we have deduct the allowable deductible, which we are not doing that now. But on the surface, you fall into the tax bracket of 18%. So you're going to pay 18% of that 3.6 million naira. So Mr. Alexander, no, sorry, who asked that question? Is Nelson. So Nelson, I don't know if I answer your question with that on the surface of it. I don't know if I answer your question. However, if I take it further, that 3.6 million, remember the law allow you to deduct 800,000 naira from it. So 3.6 million to deduct 800, which is that 800 is tax free. So it will not be left, you will not be left with 2.8 million. 2.8 million. Then if you deduct your, so I'm giving this answer now as a self-employed, not company now, self-employed. So once you remove 800 from that 3.6, it remains 2.8 million. Then your house rents, either 20% or 500K, depending on the one that is applicable to you. Remember, when we say deduct, it's not as if you just deduct it and go. There must be evidence for it. There must be evidence to show that, okay, my house rent in a year is so amount. Collect receipts. Based on that receipt, we now determine how much you're going to deduct for rent, either 20% or 500K. So let's assume that you are allowed to deduct 500K from that 2.8 million. Once you remove 500K, it will now remain 2.2 million. So you can see 2.2 million. So let's assume that that is only the amount that you have deducted. So your tax is going to be, they're going to tax you on 2.2 million. I think that 2.2 million should bring you down to 15% bracket. So they will tax your 2.2 million, not the total inflow. So I think with this, I should be able to have answered your question. Well, our time is up. It's already 11 o'clock. But let me just see if I can answer one question here. Let me see which one I will pick now. Okay. Someone is asking if I can drop the link to register for team. All right, I'll drop the link in the WhatsApp group. I'll drop the link on the WhatsApp group for you to be able to register for team. Then the last question I'm going to take is this one. As a person whose income is within the 800K threshold, do I need to keep record? Yes, you need to keep record. You need to keep record because the tax authority do not know how much you earn. The tax authority, they don't know. Although they have the capacity to know if they want to know. They have the capacity to access your bank account. But they will not just wake up and go and access your bank account. However, let's assume that they don't know. So you are the one that will disclose it to them. So you have to keep record to show that, yes, this is my income is below 800 threshold. So of course, you need to keep record. You need to keep record. You need to keep record. So I think with this, we have come to the end of our today's webinar. So for those of you who stayed behind, thank you so much, and see you in the court class or see you some other time. Thank you so much.
Okay.
So Chris, is there any other thing again?
Okay, so I think that's all for now. I said link to register for TIN using NIN. Okay. Am I going to be able to ask questions? I think we've answered all the questions. In other ones, you can join the cohort. Once you do
Yes,
that,
if you join the course, or if you join the course, you're going to have the time to ask questions. Not just questions. You can even have one-on-one meeting with any of us.
yes.
I think that is one of the beauty of the cohort class. One of the beauty of the cohort class is not even about the lecture, the education, is that you are going to have access to access to us one-on-one. You can schedule a meeting maybe for at best 20 minutes, 25 minutes, or 30 minutes at best, where we can discuss try to understand your business and also how we can assist you.
All right. I think that's all for now. Thank you all for attending and staying to the end of the class. God bless you. We'll see the rest of you inside the cohort. Thank you so much.